Hi, this is Joseph. The purpose of this video is to show prospective subscribers to my trade copier service how I trade. And why this is important to you if you're considering my trade copier service is that, and I've always said this, I always believe that it's definitely something you want to be aware of, is who is doing the trading for you. What is their trading style? What is their experience? Do they know what they're doing? Or is it sort of a black box system that executes trades where nobody's really confirming anything? Which I think is a big mistake. There's a lot of people out there that make simple programs and then they let them run with a little bit of back testing, and those software or little programs will eventually blow up your account. I did receive some emails today from some subscribers that are currently using my trade copier, and they mentioned that over the last couple of days, since the beginning of this week, today is Thursday, since the beginning of the week, they've had previous services that they used from other people who offer either signal services or trade copier services, and they've blown up their account. So again, let me review, first of all, my experience and how I traded this. So we're going to compare, what you're looking at here is the dollar yen. We're going to compare that to the pound dollar and the euro dollar. So we'll give it a quick look here. And this is for day trading purposes. What you're looking at is the dollar yen chart right now, 15-minute time frame. And I go back and forth between different time frames. I am always keeping an eye on the daily, weekly, monthly, but I'm also looking for intraday trades on the 15-minute, 30-minute, 1 hour, and occasionally on the 5-minute chart. It really depends on the activity and what I see on the charts. So let's take a look at the pound dollar. So this is the pound dollar, this is the 30-minute chart. And you can see here for the last couple of days it's been pretty choppy. So there really aren't too many trade opportunities. If I see one, I can see a little spring right down here and then a couple of different tests. So if I get into a trade like that, it's going to be a scalping trade. And I don't usually mess around with those. I stopped scalping like that back in 2003, 2004. I started doing that when I first started trading, and it was fun, but it's not the way to grow an account substantially, where you're going to see trades that will result, day trades that will result in anywhere from 20 to 40, 50, maybe even 100 pips for the day. So you got to go up, a different time frame or avoid conditions like this. And I'm not saying that there aren't any trades here. But for me, the way I do it is I would ignore a lot of this trading activity. It's pretty choppy here. Obviously, there was an upthrust here and a reversal a few days back, which was a good opportunity, and then this move right here to the upside. So there are a few places where I execute trades, but inside of a range like this, I usually stay away from it. And I'll explain quickly how I go about finding or determining if I should be looking at one particular currency pair over another. This will also, again, help you determine if I have the skill to justify trading for your account through the use of the MT4 trade copier, and if I know what I'm doing. So that's the primary reason for making this video. Here's the euro dollar, and this is the 1 hour time frame, and you can see that this one's been a bit choppy. Again, there are some small scalping little opportunities here when price reaches resistance or support. But you got to be careful. We all know, we've all been there, where you try to trade inside of ranges like that, and sometimes you can get stopped out if you're not too careful. Eventually it's going to break out of this range. And the other issue is that if some of these other services and the people who run those services, like trade copiers or signal services, if they don't have the experience, meaning a period of time where they have been doing nothing but trading the markets and watching the markets and learning how certain events, whether it's economic data or wars or certain crisis events like the global financial meltdown, the European crisis, the Greek crisis, whatever it is, if they have not sat through that and then traded through that, it's very hard to explain what to do to someone who just started trading in the last 2-3 years. They've never been tested, in my opinion, and you want to use a service from somebody who's been tested. So I started trading in late 2000, early 2001, and I've traded through every major and minor crisis, including the current one that we're trading in right now. So there's a lot to learn in those scenarios or those situations, whether it's economic, just simply interest rate cycles, business cycles, whatever the case might be. So you want somebody who's got a lot of experience. So that's the other thing, is that realizing that we're in this interest rate cycle and we're experiencing this, the war between Russia and the Ukraine, and how everybody's sort of getting involved, and European nations, United States, all of them. I mean, everybody's really kind of getting pulled into this thing. So how is that going to play out? How is that going to have an impact? I see people asking that question all over social media. and they're confused by it. So again, you want to have somebody trading for you who knows how to handle that and knows what to look for. So one of the reasons, and I'm going to tighten this up right here, one of the reasons why I choose to focus in on the dollar yen over here on the right is that I can tell in a situation like this that the euro dollar, the pound dollar are likely to go sideways. You start looking at the dollar index or the dollar yen, and one of the things I've always said, I started coaching and I opened up a chat room back in 2007, and I was calling out trades live for coaching clients. And I was still trading the trade copier. I started offering the trade copier service back in 2007. And one of the things I always said was that I like trading the dollar yen. I had already been trading for about 7 years up to that point. And I said I like trading the dollar yen because it is very hypersensitive to U.S. economic data and interest rates. But that right there, you got to be careful with that. You got to realize, or any trader who understands what's going on, understands that there are times when we're not going to be looking at the dollar yen. There's just no reason to it. So to do that. So what I'm doing throughout the days, throughout the weeks, throughout the months, throughout the years is managing the cycles that we're currently in, the global cycles that we're trading in, and then determining whether or not or where to allocate my capital. Where am I going to spend my focus and time? Which one's going to produce or likely to produce better trade opportunities and more profits? So if I tighten up this chart, again, this is the dollar yen 15 minute, but I'm going to go to a daily, and you can see that there was an area of accumulation down here that starts from October 2020 or late October 2020, and then it goes here to December 2020, late December 2020, and you get that little spring in between, and then a test, and then it starts to break out of this range of consolidation, and then you get some more testing along the way. And this sort of leads all through this uptrend to the current price levels that we see here today. And we're looking at price right now in March 2022, and you can see a pretty accelerated move. There are ranges of reaccumulation, which is basically consolidation, and these are concepts that a lot of traders I work with a lot of traders throughout the days, years, coaches. I do coaching with them. So I'm coaching with traders who have been trading for sometimes 2, 3, 4 years, sometimes 6, 10 years. And many of them don't understand these concepts of accumulation and distribution. And the reason that it's important is that it helps you identify the footprint of smart money. Smart money traders being the people who are knowledgeable about how price moves within the structure. I hear that word being thrown all over the internet, structure, structure, structure. And it really bothers me because a lot of inexperienced people don't understand what they're talking about. They're using it in the most simplistic form. They're saying, let's say, structure might be a high or a low, might be consolidation, and then if it breaks out of that range, they might say something like, well, it broke structure. Or if they draw a trend line, they'll say, well, it broke structure. I go a lot deeper than that. And the people that don't study how and why the markets move the way it does, how and why price moves the way it does, who's behind all of this activity, who are the smart money traders, and how do they trade, how do they know how inexperienced traders react, that is what you learn over the course of 22 years. I've been trading for 22 years nonstop. Just about every single day, even on the weekends, I'm studying charts, I'm looking at charts, I'm looking for trades, analyzing and reviewing the trades that I had during the week. So I work at this every single day. So that is what you want, and that's who you want trading for you. You want somebody who's got this kind of experience and studies the markets and constantly works at improving and working on their craft to become better and better and better. And that's always been my approach since I started trading. Now, why use my trade copier? Obviously, if you don't have thousands of dollars to spend on coaching or trading courses, you're probably going to be looking for somebody to help you through the use of either a signal service or a trade copier where they're actually doing the trading for you. That would be good, right? I mean, everybody could use a little bit of extra help like that. The next, reason why you would consider using a trade copier like mine is that you've tried it in the past and it just didn't work. Maybe you did buy a couple of coaching courses and they just didn't give you the information that you were looking for. I work with a lot of coaching clients on a one-on-one basis. It is very expensive to work with me, but some of them had actually spent up to $50,000 and maybe even more than $100,000 on their trading education, and they still don't understand the concepts and learn the concepts that I'm talking about here in this video, which are the very basis that you want to understand. So that's really hard. I mean, you don't know who is really worth their salt. You don't know if they're going to give you the information that you need, and you don't know if they're really experienced the way they say. The next reason why you would want to use a trade copier like this is that you're just simply stressed out and you're constantly losing money. You're not growing your trading account, and you're hoping that you can either earn extra money in your trading account. Let's say you work full time, you just don't have the time to trade, or You're hoping that you can make that transition to go from your full-time job to becoming a full-time trader. And in the meantime, you could use my trade copier. Let me trade for you. Let me build up your trading account over the course of 6 months to a year or so, whatever the case is. I even have some people that are retired individuals who have opened up MT4 accounts with, let's say, Forex.com. That's one of the places that I have my accounts with here in the United States. And then I trade that account for them. And they never execute a trade. They just simply let me trade for them. So it's almost like having a managed fund without having to pay the the performance fee and the service fees and things like that. So these are just some of the reasons why you would want to use a trade copier like mine. Let me walk you through the setups here over the last few days on the 15-minute time frame. I did mention that I was going to talk about that. So when we talk about accumulation, distribution, if you haven't heard these concepts before, I'll just give you a brief rundown. Accumulation is basically consolidation at the lows prior to a big markup or big rally, whether, regardless of the time frame you're looking at. It's all relative to the time frame you're looking at. So if you're looking at a daily, like this one here, we can see that this is an area of accumulation, and then this is all prior. So the smart money is basically acquiring at the lows and loading up on their position because they know something's happening here. And this goes back 2 years approximately. So you can get a pretty good idea that the smart money knows something. And then you see these areas of consolidation. So these are what we call areas of reaccumulation. Reaccumulation is basically pauses along the way, but it's also an area where smart money traders can load up and strengthen their positions. They're loading up more to this trade because, as you can see here, right where I'm moving my cursor, this goes back to April 2021, and then you've got a low down here, late April, and then it just continues in this trading range, and then it continues higher. Well, there's going to be some catalyst. There's going to be some event that actually causes it to break out of this range. Smart money traders are acquiring or absorbing more of whatever is available because the inexperienced traders are losing interest in this trade. They're trading this. This is a daily time frame for the dollar yen. They're trading this in and out. You can see that sometimes there are days or even weeks where there's really slow or small trading ranges, and you just don't get too many trading opportunities throughout the day, even if you're a day trader. And in ranges like this, I generally stay away from it. I am acquiring more if I'm holding onto a bigger position, but with the trade copier, I am using the smaller time frames like the 30-minute, 5-minute, 15-minute, 1 hour, so that I can day trade. That way you can lock in profits every day. I'm basically day trading with the intention of getting out of the trades in the same day so that you can see money pretty much every day. I primarily do not day trade off the daily time frame, swing trade, with the trade copier service. I do that for myself on my own personal private account and for a private fund that I started back in 2005. But for the purposes of the trade copier, I just want you to know what you could expect. You could expect to see profits pretty much every day, and I'll show you exactly some of the trades over the last couple of days here. So again, smart money is very, very careful. They're not trading in and out of this range. So we break down these ranges of consolidation or reaccumulation, let's say, for example, or accumulation. We break them down into phases, phase A, B, C, D, and we look for certain characteristics. There are certain things and certain patterns that happen in phase C and then in phase D that give us the idea that smart money, and we can trade right alongside with them, smart money is sort of stepping up or increasing their interest in that particular stock or that commodity or that currency, whatever it is that we're trading. And then you start to see that next breakout and that next leg of the price of the uptrend to the upside, and price continues a lot higher. So as we started to see over the last few days, I mean, this has been going on for about, I think, almost 15 days. I use a 5-day moving average on my daily time frames just to give me a gauge. It's not a trading strategy by itself. It's just a gauge, and I can see how many days the daily bars or the daily candles are closing above that 5-day moving average. And I categorize these trends. Sometimes I'll see 3 to 5, sometimes I'll see 7, sometimes 10 and 15. So it gives me a pretty good indication that, at least from a technical perspective, I can continue to focus in on this particular trade because it's not likely to stop. That's another mistake that inexperienced traders make, is that they start thinking that when they see price moving like this in a big trend, they think at some point it has to start reversing and it just isn't going to go any higher. And that's not necessarily true. So as long as we continue to hear more of the Fed speaking, or individuals from the Fed talking about higher interest rates or more aggressive interest rate hikes, things like that, and how much longer into the future they're going to continue to do that, we could expect that this pair, because again, as I mentioned before, it is hypersensitive to U.S. economic data and interest rates, it is likely to do that. But when there isn't really any discussion and nobody's really too concerned about interest rates, we would likely see price moving inside a consolidation. At that point, I would stop focusing in on this pair pair, and I'd start looking at something like the pound dollar. So back in November on the pound dollar, there was an area of, let me go back over here, there was an area of accumulation right here, and I was able to trade this breakout. This goes back to November 2021, December 2021, and I was able to trade this uptrend in this rally. And you can see that it moved quite a bit. It was really substantial. So I was able to go back over here and trade this one as opposed to, let's say, trading the dollar yen if it's just going to move sideways inside of that tight trading range. It's only when the market starts to shift their focus on interest rates, the possibility of higher interest rates. Let's watch inflation. Let's watch all of these different things that a lot of inexperienced traders don't know how to dissect. They see the information, they see the reports, but they just don't know how it translates into a trading opportunity on these currency pairs. And that's what you want to avoid. You don't want to trade with anybody that just doesn't have enough experience. So here with the pound dollar 30-minute time frame, I really haven't had too many opportunities over the last couple of days. I can see, there was a spring right here and a little opportunity here. That was for about 20-25 pips, and then that one was done. I knew that it was likely to run right into this area of resistance. We call this an automatic reaction. We call this a selling climax, at least relative to this time frame right here. And then the same thing happened over here with the euro dollar. There was some economic data, and I knew that it was going to be too choppy to try and trade it right here this morning, so I stayed away from it. And then you just get these little tiny moves. There's really no reason for me to put my attention and time into this pair or the pound dollar when I can simply come right over here, go to the 15-minute chart, find the patterns that I'm looking for, and find these breakouts. So for example, there was another breakout right here with an entry at 74 or 75. And I was able to trade it right up. There was two different targets, and I was able to trade it right up to the 35 level. And that, I think, price so far has gone up as high in the last 30 minutes. And we have higher targets, 43. So one of the ways that I go beyond just sort of looking at, let's say, the charts and trying to figure out, well, how far is this likely to go? That's the next question. A lot of people are looking at it. And again, those are the people that don't have enough experience to know what tools to be able to calculate how far price could go. So they would go to a daily time frame and they'd think, wow, I don't see anything over here to the left. So they go up another time frame higher. They go to the weekly. Now we start to see some things that make some sense, right? We see some other areas of resistance. But the question is it possible that this pair could go and break right out of that and even go even higher? Let's go to the monthly time frame, and we can see that we can go back up all the way over here to 2002. I was trading this. This is when I was at the beginning of my trading career, and I remember this high and this top right here on the monthly time frame, and I was using, again, these same principles of distribution or accumulation. Accumulation, again, a range of consolidation at the lows prior to a big trending move and a breakout, and then distribution, which is, again, a consolidation at the highs, and then a markdown phase. So smart money is participating in these big campaigns that move 2,000, 3,000, 4,000 pips. And a lot of people don't know how to trade that. They don't know how to analyze this information. Certainly, they have this fear of missing out so that they kind of bounce back and forth between these different currency pairs and they don't know what to look at. The other issue is that they just don't understand these concepts, so they start using things like the Fibonacci tool. They start using the Fibonacci tool in all of the wrong places. How do I know that? Well, I made the same mistake. Let's go over here to the 15-minute chart, and I'll show you exactly what I'm talking about. So if we go over here, let's say to this range of consolidation, so there was another area of reaccumulation. So you see this range right here. I had a high and a low. This was back a couple of days, and I see this. This is kind of a buying climax, a selling climax, and I'm trying to calculate, is this still reaccumulation? Well, I've got a point and figure chart. I actually use point and figure on the daily, weekly, and monthly, and I've got targets that allow me to trade it to all of these levels. So prior to, let's say, the 115, the 120 level, I knew it was going to go a lot higher. So if I tighten up the charts again over here, you can see that we've been just in an uptrend for quite some time. So I can trade this intraday, right? I can trade it for day trades and be realistic, get in, get out at specific targets that I'm using on the small. So I'm using that tool, the point and figure charts, to give me a closer, more or less smaller time frame trading opportunity. So I can trade it to these specific targets and then get out. And then I start all over again. I watch during the Asian session, which is what I'm doing now, to make sure that things remain intact, or if I see something that shows signs of a reversal, I can start to prepare to trade and either maybe avoid that or wait for price to pull back at the lows and then trade a bounce to the upside if I still have further targets on the larger time frames. Many different things that I need to use, but I use these tools in a very specific manner that a lot of inexperienced traders don't know how to use. So let's go back to the example with the Fibonacci tool. Again, an example of what I used to do, and I see a lot of traders making this mistake. They'll see a low, and they're looking at just this area right here. Now, we know what happened over here afterwards, right? But when you're looking at the charts, and this is all the information that you see a low, a high, a pullback. I used to draw my fibs right here. I'd say, okay, well, we're in a previous uptrend. Maybe this is an A, B, C, and it's going to break out and take out that high. Well, sure, it does eventually, but where's your stop? Can you stay in the trade? Do you know what's going to happen? Does it freak you out when it doesn't go where you expect it to go? So let's say you have the A, B, C pullback, the 618, for example. You get in on a bullish engulfing candle. That's another mistake. I used bullish and bearish engulfing candles, evening stars, morning stars, all over the place inside of consolidation. Again, we refer to this as phase B inside of this consolidation or reaccumulation, and I stay away from trading it inside of phase B. I know it's not ready. I trade over here in phase C and I look for springs. I'll talk about that in just a moment. So here you see that things start to roll over. Well, if I was trading this back in 2000 and 2001, and I learned how to use the Fibonacci tool right away, and then I bought every book on candlesticks, charts, candlestick patterns, things like that, a lot of people do the same thing, and then they just don't go any further, and they don't know what else they need to learn to figure this out. So I didn't know these concepts of accumulation, distribution, smart money principles, and tactics, and things like that in the first year of my trading career. I had to study that towards the end of the first year, the first half. So this is what allowed me to earn back a lot of money from my losses, many different things that helped me get to the point where I could stay in this game for 22 years. So again, as I see price pulling back down in the beginning of my trading career, and a lot of people make this mistake if I'm using the Fibonacci tool, and they believe that the Fibonacci tool is the golden tool. They think it's the only way to trade, and it's not the only way to trade. You need to understand these concepts of accumulation and distribution first before you start using these tools. Fibonacci is a tool. It is not the way to just get in and out of a trade. Sure, it's going to work sometimes, but let me show you where it works. And if you don't know how to use your tool, it's like a carpenter or anybody else who is really good at any kind of particular craft. If you're using the wrong tool, you're going to end up with really crappy results, right? You're not going to be a very good carpenter or whatever the case is. And the same thing here with this business. If you don't understand how to use these tools appropriately and you don't understand the basics, then you're probably going to have a lot of failed trades and it's just not working out for you. So I would have been stopped out right here. I would have closed out my trade if it would have taken out the the C low at the 618. I would have thought, okay, this isn't working. This is another 12, 13, 14, 18 hours. And then it comes down here. If I didn't get stopped out here, I would have been stopped out here. So I'm just explaining what the mistakes that I would have made back in the beginning of my trading career. I still see people doing it after 6 to 10 years of trading when they don't understand these concepts. Now here's something different, and this is what I'm aware of. And I look for this. When I see the buying climax and the automatic reaction, I know that we're going to see price exceed these levels. That's okay. That's exactly what I'm looking for, and I wait and pay attention. I see that this is the smart money trap, and this is where people start to sell, and they think, okay, it's not going to go any higher. It's been in an uptrend for a long time. It's time to sell. None of these buying opportunities here worked, so the inexperienced trader starts to sell, right? We see it breaking down here, and they think this is the time to get in and sell it, and then it reverses. This is the smart money trap. I see some people refer to it as banks. Okay, again, a lot of these people have been trading for 2 or 3 years. COVID created a lot of new traders into this business, and they're all jumping in, talking about how great their trading system is and how they know how to trade with the banks. They don't understand how banks trade, and they're just they're trying to sound a lot smarter than they really are. They don't understand these principles, because I never hear those people that talk about smart money or banks. They never talk about accumulation or distribution, and they never talk about looking for these setups like spring. These are tested. These are strategies. I didn't develop these strategies. I learned these strategies, and they've been used over the last or more than 100 years. And some of the greatest traders in history use these strategies, and that's why I always say you need to learn that. But again, use my trade copier. Let me do this work for you while you learn these principles and build your trading account. So this is a spring, actually. This is what I wanted to get to. This is an area, and you can see that white box right there is the test of that spring. And here's where I get confirmation when I start to see these bullish candles start to pick back right up. I do look at bar charts primarily. I pay attention to bar charts because it forces me to extract as much information from the way the bar forms, sets up, the range, the high and the low, the ease of movement to the upside, to the downside. There's a lot of things that I talk about in my coaching course. You don't need that information if you're going to use my trade copier. Just know that I understand this information, and this is what the smart money is doing. And this is why all of these individuals who are teaching, who only have 2 or 3 years, are failing. or they operate signal services because it's easy to throw up a website and sell it to somebody, or a trade copier service, but they just don't have these skills, and you want somebody who has these skills. So here was the spring. I wait. So there's a couple of different opportunities. I can wait for several different tests. There was one right here, another one here, or a break out of that range, and then there's another test here, and then it did the same thing here, or broke out of this range and then pulled back and tested again. So again, this one gave us an entry this morning or early in the before the London session, and this one was a breakout with an entry at 75 with a final target up here at 35, and it went up as high as 43. Now we see another pullback. This is kind of interesting. We're going to pay attention to that to see how that's moving. It's not the first time that we've seen a setup like that, so we still don't know for sure that the trend to the upside is over with just yet. There was still even more talk again from some Fed officials that were talking up the possibility of increasing the size of the interest rate hikes, which again could have an impact on the way traders, the smart money traders, react to the dollar yen. So thank you for listening. I know that this went on kind of a long-winded explanation, but I think it's really important that you understand that when you use My Trade Copier, you're using a service backed by somebody who's going to have your best interest in mind. Every time I execute a trade, it is the same trade that goes into my own personal account. I want these trades to work. That's how I make my living. That's how I feed my family. I have a very big family. I've been doing this for 22 years. Every trade that I execute is the same trade that my trade copier duplicates, and then it enters that trade right into your MT4 account. So you can rest assured, whether you're sleeping, when you're awake, if you're at work, whatever the case is, or you're retired, I'm going to be trading just like this, using all of my skills to analyze the markets, analyze the data, watch how people... There's a lot of psychology that I didn't touch on that is behind all of this smart money tactics, the accumulation distribution, reaccumulation, redistribution phase. There's a lot of psychology by understanding who I'm trading against at these particular hours and days. Let's say phase B, I said I didn't trade in there. That's usually where the inexperienced traders lose a lot of money, which is right here where I'm moving my cursor right around this range, and in this range right here, you can see it. Actually, this range right here, I'm sorry, let me go back over here with the crosshairs to show you. This is the phase B section that I generally stay away from. But a lot of traders don't understand this, and they keep trying to trade in here, and they just get stopped out. They don't know what they're doing. It's frustrating. They don't understand these concepts. So I also have to understand that in different phases of these consolidation phases, I also have to be aware of who I'm trading against and who's causing price to move around. I want to be tracking and watching smart money, and then noticing where we move into phases where the inexperienced traders are just chewing up their trading account. They're not going anywhere. They're just, maybe they'll have some winning trades, maybe they'll have some losing trades. But again, if you want to use a trade copier that's backed by somebody who knows what they're doing, you can rest assured at night when you go to sleep, I don't blow up trading accounts, and this is how I trade, and you're actually using somebody who's been doing this for a long time. I still trade my own private fund that I started back in 2007, and I still have the same investors. I'm sorry, 2005. My chat room started in 2007, and I started offering the trade copier in 2007, and I've had over 10,000 traders use these strategies, these trade copiers, everything that I'm teaching here or explaining here in these little short video lessons. But this was basically just designed to give you a pretty good idea of what you could expect if you're going to use my trade copier. I just want to show you quickly here that if you're interested in my trade copier, I've got two options. The first one is a monthly plan. It's $149 a month. This is going to go up in the next couple of months. It's going to be substantially higher. But you can lock in the price if you sign up now. Nobody who buys before the day that I increase the price is going to see it increase. It will always remain $149 a month. And then I do have a quarterly plan where you can save $251 and you can get in at $345, and you get 4 months of service. And then every 4 months you can resubscribe at this particular rate. Even when I increase the price, you'll still lock in the rate.